Okay guys, this is just a quick update for the Dow Jones and a couple of other correlated markets. It's been a while since I've done a YouTube video, so had a bit of spare time today. If you guys are interested, you can follow me on Twitter and stuff, and go to my Shopify site if you guys want to have a look at the trading videos and stuff. So if you guys are interested, just go and have a look. So yeah, I'm just gonna go over the count on the Dow. So I've said it a while ago, eventually the Dow's gonna hit, the Dow's gonna hit 40,000 within 10 years, after which point we're gonna get a very sudden steep correction to around 7,000. So I can't only go on the monthly really on the Dow. But I've had a look at the Dow ever since the crash of 1929, and essentially this is the terminal leg. What we had with the tech boom and with the crash of '08 was actually an ABC expanded flat. So this is where the power of Elliott waves really allows you to predict so many events. It's very clear that this was an expanded flat. As you can see, A, B, and then 1, 2, 3, 4, 5 for a C wave. And now we're going into the terminal leg for the Dow, and we're going to finish up a basically 120-year cycle. Well, I mean, the crash of 1929 was in 2029. So I can see the Dow hitting 40,000, but at some point over the next decade, so 2018 now, isn't it? So the next 6-7 years, and then that will then end. That will be a wave 5 of a wave 5 of a wave 5, ending what is the 120-year market of 120-year cycle. In which case, it's going to correct really heavily to at least the 2008 low. Because it needs to correct to the prior wave 4. So this is the power of Elliott wave. It really allows you to predict so many things ahead of time. And I'm not holding any stocks currently. I'm not happy with the Dow at its current level. It might go a little bit higher, but the count on the Dow is that coming out of '08 we had a wave 1, then we had a wave 2, which was likely here. I mean, there are two counts actually. Either your wave 1 was here and your 2 was here in an expanded running flat, or you can just count that as a 1. I'm personally counting this as a 1, and then the 11 euro recession as a 2, and then basically this is all a wave 3. This is not a wave 5 at all. It's 1, 2, 3, 4, and now the last couple of years has basically been wave 5 of a larger wave 3. And the way you break down this count is to is something like this. So those of you in the private subscription group, you've obviously already got this. So you can break this down into 1, 2, 3, 4, 5, 3, 4 extended wave 5. Yeah, so obviously that's going to be on a level, make that a minute level. So we're definitely going to be topping out in a 5. This is an extended wave 5, and from Elliott wave teaching we know the distance in an extended wave 5 is equal to the distance of waves 0 to waves 3. So you take that distance and you project it. So equality is around here, which is very interesting. So we're hitting that mark. 1.618 is at 29,000. You can also, I mean, there's so many ways you can come up with some fib targets here. You can also do the reverse extension from wave 3. So your wave 2, your 1-to-1 ratio is at 26,906. And then I've also done some other targets based on the entire wave itself. So if all of that is a wave 5, that's going to be relative to waves 3 projected from 4. So there's your 1.618, and it's now creeping up against the 1.382. So this target could probably be tightened. I don't even think it'll hit 30,000, to be honest. You can really tighten this target to anywhere from where it is now to around here. So Elliott wave really allows you to project so many things, and when used in conjunction with correlated markets, you can really accurately deduce what you want to do. Because if I'm counting this right, this is now going to end a wave 3. So we're in for a recessionary period in America 100% at some point this year. People are saying March, but I like to be well ahead of time with these things. Cash is going to be the safest thing, certainly US dollars, because we're expecting a resurgence. So even if you drop your fibs from where it is now or there, this was quite a shallow retracement for the wave 2. So, you know, this could also be shallow, could be 38% to 20,000, could be 18,000. Either way, it's not a nice time to be in stocks, I don't think. As I said, time is so hard to predict. And this was quite a simple ABC correction for a zigzag too. So I could expect this wave 4 to be slightly more complicated. Probably going to go into a more complex, deeper correction. So good luck if you're in stocks. I'm not holding any stocks. I've sold out as of last week. But then after which point we're going to get its final leg up in the next couple of years. It's going to bottom out. Then we're going to get this final surge up towards 40,000 eventually. I mean, give or take 5,000 either way. And also the other thing that's worrying me is the RSI. It's so high on the Dow, ridiculously high. And also if you have a look at the futures contracts, small and large specs are incredibly long off the market, which is not a good sign. And it's printing a doji here, so it's just a matter of time before the Dow starts rolling over. Could go a little bit higher. Either way, who the hell cares? It's not a good time to be in stocks, especially with the bond market doing what it's doing. So the bond market is slowly sort of collapsing away. No one really understands the bond market, but basically as people sell off in bonds, the yield goes up. It's actually inverse, and the 10 years at 2.6, which is a 3-year high. So this is the Vanguard ETF, which I like to follow, that tracks the bond price. So it's making lower highs and lower lows, and right now it's at 89. So it's just a matter of time before it breaks this support from last year, and then it's going to go even lower. So historically that's positive for gold, but given the way that the markets have been manipulated, it's actually going to have the opposite effect. And the reason the stock market's been going up, as well as cryptos and everything else, is because of the weaker dollar. But every professional trader is watching this 88 level, where we're expecting a bounce in the dollar. So everything's going to happen at the same time. The bounce in the dollar will make money more expensive, hence people will sell out of stock. So I'm expecting at least a 30% correction in the Dow at some point this year. So as I said, it's not a good time to be in stocks, especially when money is going to get more expensive. Every time throughout history when money's been locked out off the market, or it's been made more expensive through interest rates and inflation, there's been a recession. So that's just the way capital markets form. Correlated to the US dollar. So the count here is either an ABC expanded flat, or it's a 1, 2, 3, 4, 5, and that's the beginnings of A. It's going to go to 96 and then 60, or it's going to go to 96, then come down and then continue to go back up to 116. There are two possible counts. I'm favoring the 96 and then down, but let's see how things play out. Either way, dollars is a good place to be in. So yeah, that's the am I recording this? That's the count. So I mean, this is very clear to see. 1, 2, 3, 4. Now we're making a larger wave 5, and then if you break this wave down on a smaller level, 1, 2, 1, 2, 3, 4, 5, 3. It's pissing about to make a 4, but we're going to get one move down. Once we get that move down, we'll be able to do the divergence as we need to. Then we're going to get a very strong, very strong impulse here. Once again, everyone is positioned long with the US pound, so short specs are very long. So you want to have a look at the Commitment of Traders report that gets released every Tuesday. So the pound is finding resistance at this level, 50% fib. Wave 1 is here, so the point of no return is 1.45. I can't see it reaching that. A lot of bullish news on the pound today, which is a negative sign, and we're getting this divergence playing out. It's not great, but it's enough for me to be worried about the pound. So yeah, I'm expecting the pound to come down all the way to 107, and then linked to that is the Euro USD, which makes a big portion of the dollar index. We're getting some divergence here too. So 1, 2, 3, 4, 5, and then also with the euro, I believe there was a line of a trend line, both horizontally and let me just delete all this nonsense here. So there was this support, and then there was this support here, which is pushing on right now. So this was the 2008 crisis low. Hit that again, hit it here, here. Is pushed down below that. It's never really retested that. It's got some resistance to break through, which it isn't going to do, let's be honest. And there's also I drew a descending trend line, which is something like this. Once again, it's not perfect, but that's been a strong line of support for the last, well, God knows how long, for the last 10 years, for the last decade. That's all has been running it down. And you know, it's very clear to see that there's 5 waves which have been made up here. So 1, 2, 3, 4, 5. So with the state of the markets right now, I'm expecting the dollar to reverse, euro come down, pound come down, bond market's going to collapse, and the Dow Jones to correct probably 20 or 30% at some point this year. Could happen in March, but I'd rather be early. I'd rather position myself for that move now. Could happen next week. You never know. Certainly if the 10-year closes above 2.68 or 2.7 on the weekly close today. That's why weekly closes are so important. I'm quickly going over Bitcoin. I don't want to cover this, but in this type of video. But so Bitcoin. Yeah. So I'm trying desperately to count 5 waves down into here, but I can't. So this was the count I showed to my private subscribers last Friday. So I advise them to go into cash because it's a little bit risky here. Typically wave 3s are face ripping in their movement. So if that's an A, this is basically an ABC. Yeah. So ABC A, ABC B, 1, 2, 3, 4, 5 C. So it went into a complex correction for the B wave. This is a 1, a shallow 2. I can't count 5 waves here comfortably. I want to say this is the bottom, but I can't. So C waves, they don't usually last. They're not usually this quick, and they're not usually this shallow. They're minimum 1 to 1. You could argue 1 to 1 has been reached, and it has, but I've got lower targets, so at least here, and then probably even as low as here. So those are my targets. I'm sticking to them. If you don't think that's accurate, then you can go do one. But I've made this mistake before where I've tried to count 5 waves when there aren't any. So you know, you could say 1, 2, 3, 4, 5 maybe, or a 1, 2, 3. All that is a 4. That's a 5. But I'm not happy with that because that's quite a short wave. Even though it's not the shortest, I'm not happy with that. As far as I'm concerned, the point of no return for a short position on the Bitcoin, or to be long on Bitcoin, to be short, is going to be here. So it's 12,814, because very logically in Elliott wave teaching, if I just show you the wave counts, this is where Elliott wave is amazing, because 1, 2. So with Elliott wave, we know wave 4 can't cross wave 1. So if this wave somehow makes its way up past 1280, whatever this is here, we must have counting it wrong. Therefore, this must be the bottom. Therefore, we must have to reassess the wave count and make a bullish 1, 2, 3, 4, 5 out of this. Then expect a retracement, and then we got on the long side. But so far, that hasn't happened yet. So I'm going to stick by my count. But the minute this wave 4, so this is referring to this wave here, crosses wave 1, which is here, this count must be invalidated. Therefore, the only logical conclusion is that we must have had 5 waves down in some way, shape or form. That's the bottom of C. The correction's over. Obviously, it's not a good time to buy here because it's likely they'll find some resistance anyway, but it's likely all of that will then be a 1. Then you're waiting for the 2. Okay. As far as I'm concerned, that probability isn't. It is on the table, but it's not even worth considering as such because it's not broken this level yet. So that's the level that I'm waiting for. If you guys want to buy Bitcoin at this price, go for it. I wouldn't take more than a nibble at it. I think the big drop's coming next week, so I'm not buying anything on Bitcoin as well as altcoins until next Wednesday. Even though some of the altcoins are cheap, I'd rather be risk free, and I don't like to put in trades before the weekend anyway, because even though Bitcoin's a 24-hour market, the other markets are not open, so it's just too much risk. So I think you should take 5 days off and come back to Bitcoin on the 24th while we reassess. Hopefully by that date it'll be either here or it'll be here. Also on the technicals, this daily RSI, it's getting quite close to 30. It was at 35. I want it to go in the oversold area. As you can see, this 50 EMA has provided support pretty much the last, however long on Bitcoin. So this 50 EMA has supported Bitcoin ever since 2015, this 50 EMA line. Sorry, it's not on there, is it? Where did I draw it on my daily chart? Yeah, so it's pretty supportive of the price, the 50 EMA, the whole way up. Obviously, there's been the occasional time where it's crossed below, but it's never really closed underneath it. So and right now the 50 is rolling over and it's providing some sort of resistance to the price. So it's not Bitcoin at this moment in time. I don't want to be anywhere near it. I'm not happy with this close. Okay, that's not a good close. That is a doji candle. That's a good typical textbook reversal candle, but it's not been confirmed at all. So if you guys are interested in knowing about confirmation and whatever else, just have a look at here. FF new and FF008 are the discount codes. So there's no confirmation there, and the trend is clearly down. So don't fight the trend. You never catch a falling life, and dogs who chase cars will eventually get run over. So and now the 50 here since November the 13th was providing support. Now it's obviously resistance. So I'm not going to fight this trend. I'm not going to rush back into Bitcoin. There's too much risk over the weekend anyway. So I'm aiming for Wednesday, Thursday, Friday to get back in, and hopefully it'll be at a price which I'm comfortable with. Anyway, see you guys soon.